Hello and welcome to the Real Estate Regroup Show. I am your host, LJ Walker. Guys, I was talking to my financial advisor. He mainly deals with stocks, bonds, ETFs, mutual funds, that sort of thing, right? And I presented a deal to him that was real estate related. He looked at the returns and everything and he was like, what's the point? He didn't really care for it. And the reason is this. He was like, you can get the same return in the stock market and yet your money will be liquid. While this particular real estate deal, your money is not liquid for 3 years. It's locked up and you're getting the same amount. So he was like, no, don't proceed with this because I know I can do better. All right. And I thought about that. You know what? I haven't always been making the wisest of choices in this area because when it comes to certain real estate deals, right? Sometimes, they promise you 6 and 8%. When I was younger, I would have definitely gone for it, but now that I'm older, I know better and I want double digits. But even then, I still have to be careful. Why? Because the average interest rate is 10% in the market year after year after year. And sometimes it goes up to 11%. Now, honestly, when it comes to individuals who know very little, and that's most people who invest in the stock market, they make 6 to 7% interest rate. Yet their money is always liquid, meaning they can pull that money out no matter what, no matter when, and not really have a penalty. All right. So it got me to thinking, okay, when I invest in real estate, it should be more than 11% that I'm getting a return. If I'm not getting a return of more than 11%, then simply walk away. And I see so many people falling for this because there are some famous people who brag and make it like 6 and 8% is such a big deal. But it's really not that. It's really not that. And then they want you to put $100,000 in the deal. So you giving them $100,000 to be locked up for 3 years. You can't take it out because if you do, you'll suffer a penalty. They'll normally charge you an additional, administrative fee amongst many other fees if you try to take that money out. And sometimes you just can't take that money out, period. All right. However, if you took that same $100,000 and you put it into the stock market, you can pretty much take it out whenever. Now, hear me and hear me well. If you take it out within 1 year, you will suffer a pretty high capital gains tax. So that is something that you do have to consider. But even then, see whether or not is that capital gains tax the same as or lower. A lot of times it's lower than the penalty or the penalties that you would get if you were to put that money in, let's say, a special crowd fund or REITs, or even a private lending deal. So guys, always consider the interest rate. Consider the interest rate before investing. All right? Okay, that's all I have for you. Feel free to pass this amongst your friends. Remember, each one reach one, teach one. Bye for now. Until next time, have a good night.